But India's export-oriented sectors are poised for a broad-based upside after New Delhi and Washington clinched this long-awaited trade agreement late on the evening of the 2nd of February. Under this agreement, the US reduced reciprocal tariffs on Indian goods to 18% from 25%. I don't welcome your watching Deep Dive. I'm Uday Pratap Singh. Announcing the deal, US President Donald Trump has said it would be effective immediately, signaling swift tariff relief for Indian exporters. Trump, in a post on Truth Social, announced, out of friendship and respect for PM Modi and as per his request, effective immediately, we agreed to a trade deal between the US and India, whereby the US will charge a reduced reciprocal tariff, lowering it from 25% to 18%. He added that India would likewise move to cut its own tariffs and non-tariff barriers on US goods to zero, likely a part of the much-anticipated trade deal between the global powers. PM Modi welcomed the tariff cut as a boost for Indian industry and exporters. Notably, the rollback comes after months of stress following steep tariff hikes, in some cases up to 50%. That had kicked in from the 27th of August 2025, sharply raising landed costs, hurting competitiveness and weighing on demand for Indian goods in the US, India's largest export market. Now, with the tariff burden easing, companies with significant exposure to the US are expected to see relief in margins, improved competitiveness and better order visibility. The tariff cut is a meaningful positive for several export-heavy sectors, including textiles and apparel, seafood, auto, ancillaries, engineering goods, chemicals, gems and jewelry, as well as select consumer exporters. Textiles and apparel are widely seen as the biggest beneficiaries of the pact. The US accounts for nearly 28% of India's total textile imports, making it the single largest destination for Indian manufacturers. More than half of India's textile and apparel imports are also linked to US cotton, underscoring deep trade integration. The segment is amongst the most price-sensitive within India's export basket. Products such as cotton, garments, home textiles and made-ups compete directly with suppliers from Bangladesh, Vietnam and other low-cost hubs. A reduction in tariff narrows the pricing gap and supports large exporters supplying US retailers in mid-value categories. Companies with higher US exposure are likely to see faster volume recovery and improved pricing power. Stocks with significant US revenue exposure include Indo-Count Industries 70%, Kitex 70%, Gokaldas Exports 67%, Pearl Global 64%, Welspun India 61%, Himmat Singh Sedi 60%, Trident 28%, Vardhaman Textiles 25%, SP Apparels 22%, Arvind 14% and KPR Mills 9%. In chemicals, particularly specialty chemicals and intermediate exports are governed by long-term contracts and stringent compliance norms, while demand is less sensitive to short-term price swings. Tariffs directly impact net realizations. The tariff cut strengthens India's position in US supply chains looking to diversify under China Plus One strategies. Key beneficiaries include UPL, 20 to 25% US exposure, SRF 20% and Jubilant Ingrevia 9%. Other potential gainers include Aarti Industries, PI Industries, Atul, Naveen, Fluorine International, Deepak Nitrite, Vinity Organics, Alkyl Almines Chemicals, as well as Gujarat Fluorochemicals. Engineering exporters are also expected to benefit. Engineering goods form the largest share of India's merchandise exports to the US, spanning industrial machinery, electrical equipment and capital goods. These businesses typically operate on thin, single-digit margins, making tariff relief immediately earnings accretive. Lower tariffs improve India's competitiveness versus East Asian suppliers, especially in contract renewals and incremental orders. While volumes may not spike immediately, exporters gain pricing flexibility and stronger negotiating leverage in long-term supply agreements. Stocks with notable US exposure include Sona BLW 40%, Ramakrishna Forging 27%, Bharat Forge 25%, Samvardhan A Motherson 18%, Balkrishna Tyres 18%, Sansera Engineering 9% and Apollo Tyres 3%. Well, gems and jewelry exports, including cut and polished diamonds and gold jewelry, are high value but fiercely competitive. Tariffs directly impact retail pricing and inventory costs for US wholesalers and retailers. The reduction from 25% to 18% lowers landed costs, easing margin pressure for Indian exporters. The seafood sector is another key beneficiary, with the US remaining a critical market for Indian exporters, particularly shrimp and frozen foods. Lower tariffs are expected to reduce landed costs, aiding demand recovery and improving earning visibility. India's seafood exports to the US are expected to recover after months of decline, following Washington's decision to lower tariffs to 18% from 25%. The Seafood Exporters Association of India said on Tuesday. While exports to the US fell 15% by volume to 101,501 tons during April-November of the current fiscal, while value has declined 6.3% to $1.72 billion from $1.84 billion a year ago. Amongst listed players, Apex Frozen Foods derives 63% of its revenue from the US, followed by Waterbase at 40% and Avanti Feeds at 14%. Companies with higher dependence in the US market, meanwhile, could also see sharper profitability improvement as volumes stabilize. If carried out, the move would mark a significant shift in India's long-standing trade approach, which has traditionally deepened on protective measures to support domestic industries. It could also open the door wider to US agricultural goods, energy supplies and manufactured products. However, in trade terms, this language typically signifies an in-principle commitment to lower or phase out duties on selected US products rather than immediate elimination of all import duties. Well, non-tariff barriers encompass various restrictions such as licensing rules, quotas, certification requirements, local sourcing norms and regulatory approvals that can limit market access. Notably, the agreement also comes days after India signed a major trade deal with the European Union. And joining us now on the broadcast is Dr. Ranjit Mehta, CEO and Secretary General, PhD CCI. We also have Anjan Roy, ex-advisor FICCI, joining us live. Professor Arun Kumar, senior economist, is also with us live on the broadcast. Appreciate all of you being with us today on Newsx on this big subject. Dr. Ranjit Mehta, let me begin with you first on the immediate implications of these tariff reductions. How big a relief is this?
Thank you, Uday. In fact, the India-US trade deal marks a very decisive moment in our economic journey. This is just not a trade deal. I think this is a strategic alignment between the world's two largest democracies. As you have also pointed out in your report, that due to the punitive US tariffs, our MSMEs, especially in the sectors like textile, gems and jewelry, engineering, they were hardest hit. I think, now with this 18% tariff, we are still better than the other emerging economies in the world as far as this tariff is concerned. I think this will give a very big relief to our small businesses. And all industry is very, very optimistic about it because this opens the door to one of the largest economies in the world. At the same time, I think this deal also strengthens the trust, secures the market access for Indian industry, and it also positions India as a trusted global partner in this supply chain. I think this agreement also sends a very clear message to the world that India is open for business and it is also open on rule-based growth. So I think that overall, if you just look at it, our market access and the kind of market we are going to get in US, which was there already, because due to this disruption, many of our MSMEs, their businesses were completely, they were not able to do business in such a uncertainty. I think this deal has given clarity, and people are expecting that they are again starting their business because they were already doing business with US. I think this will open doors for other MSMEs also. At the same time, the way Indian government, India has negotiated trade deals with other countries also, overall, if you look at it, I think we have secured very good FTAs with the advanced economies in the world, and this will increase our export, as India is one of the fastest growing economies in the world with around 70 million MSMEs and very vibrant startup ecosystem. All these trade deals, they open new opportunities in a very diversified market, and we are expecting that soon we will see a surge in our exports, and this gives some momentum to our already fast growing economy. And we will also see that there'll be a cooperation, deeper cooperation in services sector, And as far as technological cooperation is also there on cards, because US has some good technologies in renewable energy and other sectors, and that technology we definitely need for our MSMEs to
Yes.
be more competitive.
Absolutely. Anjan Roy, let me draw you in here as well, of course, on these, immediate tariff reductions, which, of course, have been announced by the US president. How big a potential game changer, once again, is this for industry to bounce back from the negative effects of the tariff increase that we saw last year? How soon could we see the relief begin to show for the affected sectors?
Say, if a trade deal can be now worked out on the basis of a telephone call, then I think the trade deal itself is phony. You cannot have a trade deal over a telephone calls. Or alternatively, if there is really a lot of trading possibilities, it was that this was being artificially or deliberately restricted on political or strategic reasons. It seems as though everything was ready, but some political or strategic consideration or decision making was holding it up. Now that he has all on a sudden announced that India and US has concluded a trade deal, it came and naturally Prime Minister Modi had no option but to say, yes, we have a trade deal and it's welcome. So, I mean, this is not the way a trade deal is done. A trade deal is much serious affair, and we have seen another trade deal which was announced a week before. Having said that, now this is an afterthought on the basis on the part of Trump of his ridiculous policies. For example, India was being penalized for a war which was being fought in Europe, and those Europeans were concluding a trade deal with India. So the absurdity of the situation possibly drove Trump into retracing his steps and suddenly came out with this free trade agreement. A trade can happen, trade between two countries can happen and flourish only and only if there is basis for doing trade. So if there is complementarity or that kind of economic logic behind it. It looks as though there is enough economic logic for flourishing trade between the two countries, but it was not happening for official reasons. Now that he has realized and removing this, we can hope that trade will rise. Now, trade between USA and India is very, very asymmetrical in the sense that we send goods which are bread bulk, small, labor intensive, that kind of products, food products, marine products, or garments. Now, your garment exports of a whole full year will not be enough to cover the import from USA of one aircraft, which we do. Boeing aircraft, a big Dreamliner, will cost much more possibly than this kind of exports. So it is not as if overnight we will be having a lot of trade and we'll enjoy a very good, decent trade surplus. That kind. Let us be very practical about trade, and I think we'll have to do a lot of work on the ground to get at par with USA on these matters. Besides, the trade would also have all kinds of schedules. I mean, tariff schedule and also the domestic components, components requirement and all that. Now, USA is claiming that India will scrap all tariff on all American goods. At the same time, USA will have 18% tariff on Indian goods. This is ridiculous. You cannot trade with a country which is imposing, say, 20% tariff on your goods, and you are importing their goods duty-free. It's asymmetrical altogether. So we have to do all that business straight. I mean, we must know what kind of trade and tariff fine tuning we have to go through. Then again, this reciprocal tariff withdrawal is linked to India's purchase of
Yes.
Russian oil,
Yes.
Venezuelan oil in place of Russian oil.
Indeed.
Now, Russian oil had a certain technical qualities.
Okay.
Venezuelan oil has certain else.
Absolutely. So we'll have to go into the nitty-gritties, and there are certain concerns that remain, as you're saying. I want to quickly get in Professor Arun Kumar at this point in as well. He's been waiting patiently. Professor Kumar, your first comment to these trade negotiations, which have finally concluded last night or US morning today, of course, but the sectors now that stand to benefit as well from all of this. How crucial is this announcement going to be for, say, the fishery sector, the textile sector, jewelries, and whatnot?
So let me say, the voice is...
Professor Kumar, can you hear me?
Yeah, I can hear you now.
Okay, please go ahead now.
Yeah, so, we were very worried because our labor-intensive sectors were being hurt by the 50% tariff that was imposed last August by President Trump. So that to that extent, it's an easing of the tension that our exports would not suffer, and these were labor-intensive exports, and therefore we are worried that unemployment would also go up. So that also would ease. But I think, as Mr. Roy was saying, it's very one-sided deal. Whereas we will face 18% duties, they will face 0% duty. Now, but President Trump has been getting this one-sided deal from all its partners, whether it be Japan or South Korea, or it be the EU or Canada. All American products elsewhere will be 0%, whereas others will face 15%, 19%, 20% duty. So in other words, we are in that sense on par with others. But what are the implications? The implications are if all products have 0% duty, that means agriculture will also open out. Now, agriculture is a red line that we have drawn because our agriculturists are very small as compared to American agriculturists. Plus, American agriculturists have a huge subsidy. EU farmers also have a huge subsidy. An average American farmer, I'm told, has a $25,000 subsidy, whereas a small farmer in India earns only about $1 lakh. So an average farmer in the US might be earning $500 million, whereas the Indian farmer would be earning only about $1 lakh or $1.5 lakh. So our farmers cannot stand up to them. And roughly 50% of the population depends in some way or the other on farming. 46% of the workforce depends on farming. So if that gets hit, then income generation in the country would be hit. And in that case, our economy would be also badly affected. So I think this agriculture should not be opened up, and that was a red line for us. The other red line was the import of petroleum products from Russia. Now we have, it seems we have promised that we will completely stop the import. Now, in economic terms, it may not matter very much because the price that we were getting from Russia and the price that is in the international market is not all that different. So in economic terms, we can go with Venezuelan oil or with American oil or with some other oil, but the strategic relations are very important. With the Russians, we've had strategic relations, long-standing, and if we go back on that, then we will suffer because some of our equipment like S-400 missiles, Sukhoi aircraft, like your BrahMos missiles, they come from Russia. If they stop that, then we'll be in trouble in terms of defense. So I think these two things are very, very important that we worry about our long-term strategic relations. If our long-term strategic relations go down, then our position in BRICS will also go down. We've been trying to open up. The Prime Minister went to SCO summit, and there he tried negotiations with China and Russia. So we were trying to be more central in BRICS, which we had not been in the last few years, but we were trying for that. And if we are seen to be going again with the Americans, then I think the trust deficit would again rise and our position there would also decrease. So all in all, we have to wait. We have to be very careful. As Mr. Roy was saying, all is not hunky-dory. The problems are still there. We'll have to face them. But immediate relief, yes, definitely there's an immediate relief that is there. And as Mr. Roy was saying, it couldn't be that the deal was struck only last night. I think the deal has been in the works for the last 10, 11 months, but I think some political, penny has dropped. And that's why President Trump has agreed to go in for a deal with India. And I think there the penny dropping could be because of the Indo-EU deal. President Trump has been trying to break the unity of the other countries. He doesn't want rest of the world against the US. That's why in April, he said 90 deals in 90 days. So he negotiated individually and got good terms for himself because we were operating on beggar thy neighbor policy. That means if I get good terms, then I'm better off than others. Now that's the way he divided us up. So when he sees that India is negotiating with other countries and other countries are negotiating with each other, then there's a chance that the US may again stand alone compared to other countries, and that's why he probably has agreed to this deal. So I think taking advantage of that, we should keep our red lines. We should not give up on agriculture at all. Opening up of agriculture could be quite disastrous. Politically also it would be disastrous because the farmers are already protesting, and if they find that their incomes fall, then they will protest again, and that would not be a healthy thing for India. We already know that in September, October, we had dropped the duty on cotton. 11% duty was there, we had dropped it, and then imports of cotton increased and the price of cotton fell below the MSP. And that's the danger that will happen if agriculture product starts coming in from EU or
Yes.
from the US, then price would fall below MSP and farmers' incomes would be affected adversely.
Indeed.
And they are, a big segment of the economy. So all these caution. So while it is good that we are going in for a deal, but all these cautions must be taken into account.
They still
and
remain.
I think the
Yes.
details have to be given to
Okay.
us. Details have not yet come.
Okay. Yes, we are expecting a joint statement with perhaps those details sometime this week. Appreciate all of you joining us with your perspectives on this segment.